The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the December 10th, wonderful Wednesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a great start of your day. Let's make sure that you and I, that we do all that we can do to get every little drop that we can out of this wonderful Wednesday. Let's always remember, what's talked about is a dream. What's envisioned is exciting. What's planned becomes possible. But what's scheduled is real. And I want to thank you for scheduling your time with us here this morning. I am grateful for your presence here, and I'm here to serve you. That means just give me a call at 877-927-6648. Internationally, that number is 727-445-1044. Remember, if you've got a question, someone else has that exact same question, so don't call in for me. Don't call in for yourself, but instead, call in for someone else. A human act of random kindness out there. That's a beautiful thing. It is Wonderful Wednesday. This is TFNN. I'm Steve Rhodes, and welcome to the show right now. We got Dow off 122 points, S&P down 13, Composite off 18, Russell 2000 off 8. And let's go to our first random act of kindness caller out there. That's Bob in Hartford, Connecticut. Bob, thanks for calling. Thanks for holding. How you doing this morning?
Steve, things are good. I wanted to share an observation. If you, with the gold ETF, the GLD,
sure.
If you put it on a 3-month chart and compare the S&P, the SPY with that, looks like a pretty inverse relationship. Wanted to get your thoughts.
Well, let's do this now. Tell me where you're going with it, though. So you've identified a relationship, and then so how are you going to go ahead and use that?
I'm not sure. I'm going to probably observe it for a while, but I think maybe now that the Fed's not easing anymore and it's out of the market more or less. I think we're going back to the old days when gold was trading, with a bit of the fear indicator. So things are maybe getting back to normal. When stocks go down, gold goes up, and the reverse as well. So just thought I'd share that with you folks. And maybe you want to go long one and short the other. Who knows?
Let's do this. Let me. I was just seeing if I have a screen already out here. Not so much that we had to use. I've got gold in the GDX. I don't think I have. Let me just start with a brand new, fresh chart out here so that we can take a look at this correlation together. So we'll brand new chart. Let me just kind of expand on it. You wanted to use the GLD from a monthly standpoint, so we'll do that. Give me a moment here just to kind of get my, I didn't know what the heck I just did there. That didn't make a lot of sense. Let me change this to style template. Now, are you long or short either of these? Tell me, or really, again, just really watching a correlation out here.
I'm just watching the correlation. I'm long silver right now, which I think is a little stronger.
Okay, so I'm going to go ahead and insert. I'm going to insert as a symbol here. I've got the GLD. I'm going to go ahead and put the. Why don't I just put the SPY up here? We'll do that. So we'll just keep it to the ETFs. Let me go ahead. I'm going to change all these to line charts. Just makes it a little bit easier for us to pay attention to. So I'm going to close this. I'm going to come back up here. Now, you were saying that it had an inverse relationship. Is that what I heard?
Yes.
Okay.
I noticed it on a 3-month chart. Yeah.
Yeah, okay. So what I'm going to do is the top portion of my screen is the GLD. So I'm just going to go ahead and see if I can go ahead and invert that right now for us. And we'll go ahead and I'll make that a red color. Let's see if that, didn't like that. Didn't like me doing that. I don't, no wonder, because I got rid of something. Times -1. Now it ought to work out there. There we go. So now I've got the inverse relationship, so that way we can pay attention to it. Okay, now that I've got it up on my screen here, so I've got the inverse relationship, and what you were pointing out is since what period of time? Since coming back to what level. Now, what I really ought to do, you're talking about coming back to lows here in August of 2011 and seeing some kind of inverse relationship. Is that what you're looking at?
I was looking shorter, like since October, last 3 months or so.
Since October? Okay.
Yeah.
What I'll do is let me just do this as well. Let's go ahead and input the, let me go ahead and input the U.S. dollar index out here. So let's do that. Let's insert that symbol. I'll do the same thing here, DX $F, and I'm going to go ahead and I'm going to invert that as well. And so we can see if we've got maybe an even. Now, go ahead and I'll make that a line chart as well. That's going to come up on the bottom. I'll go ahead and make that invalid symbol. Come on, what is the deal here? Oh, I know. On this one. There we go. Okay, so now we're good. Now what I'm also going to do, I'm going to come back to this chart. We'll just go ahead and make this I'll make this one a green color. So nice we can make our chart so colorful. So what we're taking a look at here, so I've gone ahead and I've inverted the... so now on our chart, the top portion is the GLD, the center portion is the SPY, and the bottom portion here is the U.S. dollar index. Now, in the case of the U.S. dollar index, as it's getting stronger, then, it would be moving down on my chart out here. And... So tell me again where you're going with the conclusion here.
I use a different charting package, like on Yahoo, but my charts look different than yours. But I like that dollar.
Uh-oh. Hello? Bob, you there? We seem to have lost Bob. That's not good. That's not good for the conversation. Bob, if you get a chance to dial back in, I would say, here's how. So Bob's making a good point. He's looking for correlations inside of the marketplace, and he's identified a short-term correlation out here where we're taking a look at the GLD, which is up at the top. The center happens to be the SPY, and the dollar is at the bottom. But what I think that's really important for us to do is maybe take a look at each chart individually from a trading perspective. So it's good to take a look at correlations, but then we've got to be able to draw some conclusions as to how we're going to go ahead and use this data. And what you'd really want to do is you'd want to go back and take a look at divergences that occur and see if you can find a consistent divergence that always resolves itself in the direction of that divergence. Just as an example, as long as I'm in this area right now, let me do this. If we were going to go back and take a look at the GE and the Dow, we looked at this yesterday because GE is the one that has been pointing that there is some type of retracement, some type of correction going on inside of the Dow. Why do we know that? Because we can go back as far as we want inside the GE chart. I've only got this right now. I've just got the last 3 or 4. It looks like they've got the last 3 correlations. And the top portion of my screen is the Dow. And we can see here just simply coming back to the time period of about August 21st in 2014 up until September 19th when the markets made their high. GE was making a lower high. And that was an indication that the markets were going to make some type of correction. And in fact, that's what they did. And as the market here in the Dow was making, that's the green line on my screen, that's the top portion. When the Dow was moving down into the October lows, October 16th, what's interesting about GE, its low came in on October 13th and it made a higher low on October 16th. And that was a signal. Now, we've seen the same thing here follow through from the high in GE, which was back on November 18th. And if you go from November 18th to the high inside the Dow that was formed on December 5th, we know that it moved higher, but GE was moving substantially lower. So, what I'd have to do, Bob, is I'd have to go back and I'd have to take a list of what I would suggest that you do on the charting tools that you're using is go back and take a look at the correlation and see if you can find something that is as consistent as something like this. Now, on the correlations, we usually can't use those as timing tools. Well, we can use those when you see a correlation where you've got a 70, 80, 90% probability that the correlation is telling you that there's something wrong. Then what we have to do is we've got a message that's coming to us from the market, but what we need to do, it can't be used as a timing tool. At least I haven't been able to find most correlations to be able to use as a timing tool, just simply as like a yield sign, as a caution sign, as a indication of things to come. But what you can do is then just simply go back and identify patterns out here. So inside of gold or the S&P 500, out here, I just simply go back to the daily chart for gold, and I take a look at the trend line that we have looked at so much here as of late. We'll go back to the daily chart for you. We'll put up the current contract. You've got gold trading back $1, and from a trading standpoint, to me, it's pretty clear as to what we should have done. In fact, it was very clear as to what traders on prop desk were doing yesterday. They were looking at the same, they were all using the same set of tools out here, and they were looking at one of two trend lines out here. Right now, I've got the longer-term trend line. They were either looking at that or they were looking at this trend line right here. This will also show up as a red little signal. I think that was the secondary one that they were looking at. And as soon as gold started getting above that trend line, there was just a whole nest of buy orders that were being triggered. And that's why we saw the wide price spread and accelerated volume inside of gold. So from a trading standpoint, I think the message is pretty clear. Now the question becomes, what are your targets? Where is it from a trade? Is this a long-term trade? Is it a short-term trade? And that's where you just simply come back and we use these Fibonacci tools or A to B equals CD patterns to help guide us as to where price is likely to go. What I'd have to say is what we should see inside of gold is a move to the 1265, 1301, or somewhere in between that area. Now, how does that work with regard to some of the other ETFs out here or some of the mining equities? If we take a look at just the entire basket of mining equities right now today, that's what's on my screen as we speak right now. If we take a look at it, gold basically flat, and the mining equities not so fast, not so much. In fact, of the 40 or so that I've got on my screen, it looks like we've got 2, 4, 6, 8, maybe 10, 11 or so that are to the downside. The largest leader is Great Panther. That's off 3 pennies. Not that big of a deal. That's down 3%. Allied Nevada, we know that thing looks just absolutely horrible. That was down yesterday with gold and the mining stocks to the upside. You've got Taseko Mines, that's off about 1%. Fortuna Silver Mines down a little bit less than 1%. Freeport McMoran off $1. They too looked horrible yesterday. But to the upside out here, leading the charge, you got Vista Gold. VGZ is the ticker symbol. Let's go check in on Vista Gold. This is the daily chart. See if there's any kind of message here. Really, this thing has just been consolidating sideways. Now, what it is doing is trading above its market profile low, but that alone doesn't necessarily float my skirt here. This thing, has not been doing much. Does that mean that it's not ready to coil and move higher? Yeah, it could be, but I think there's other stock charts that look better out here. We take a look at, let's take a look, I'm not sure which ones they are. Let's take a look at Yamana Gold as an example. It's up 3.5% out here. A little bit more of a trend inside of Yamana right now. What this is doing today, it's moving into a sign of weakness. So if it can close above $4.42. You're trading at $4.45 right now. What this ought to do is head up to the price point of about $4.95 and then probably the $5.31 level. Steve Rhodes, TFNN. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 116, S&P down 11, composite off 16 points. And, Bob had called in from Hartford. We were taking a look at some correlations. Let me show you a correlation here that I think is really good to you. So, Bob, if you're taking a look at the S&P 500, this is kind of a unique one out here. I don't know if you can get it on your trading platform, but it's one worth paying attention to because it's one that has worked really well in providing signals. So when we took a look at the Dow and the and General Electric out there, just a very cool tool to make us aware that there's a problem, and that's not necessarily a problem. Make us aware that there's a divergence, and the divergence will resolve itself in the direction of GE. But you've got to go and find other patterns out there. It's just simply making you aware of something that, as I like to say, you got to think about. Well, if we take a look at a excellent tool for the S&P 500 or the SPY out here, what you would do is you would go ahead and correlate the SPY against the Guggenheim S&P 500 equal weighted ETF for the S&P 500. And what you'll want to look at here, and right now we've got maybe just a slight divergence out here. I've got these red lines going across my screen, and what I'm doing is I'm using the low back here from December the 1st. Inside this, the the blue and the green line on my screen, these are on the close out here. Just easier for me to take a look at and draw these divergences when I'm using lines versus using the candlestick. So I'm using divergences just simply as tools to help me understand, or I'm using lines just simply as tools to help me understand whether there's a divergence or not. In the case here, the RSP, by the way, is the ETF for the equal-weighted S&P 500. Now remember, the SPY is not an equal-weighted ETF. I don't know what the number one weighting is inside the SPY. It used to be ExxonMobil. Maybe it still is. I don't know what it is. But right now, today, the line going across here for the equal weight is just kind of where it was at back on December 1st out here. Whereas we're seeing a little bit lower low inside the weighted structure out here. I don't know how this is a tool that's not going to help us until the end of the day. So I just need to see how the end of the day plays out here. But divergences in the equal weight are the divergences that help make us aware of either of a move that is either real or not real. Like, I don't know how to really say it. Let me just put it to you like this. Let's take a look at a couple of examples out here on the stock chart. If we take a look, we'll just come back here to July of 2014. So if we look at from July of 2014, the RSP, that's the blue line on the top of my screen. Take a look at how this was making a lower high coming into the trading session of July 24th. However, inside the equal weighted ETF, the SPY itself, it was making a higher high out there. Which way did the divergence resolve itself? In the direction of the S&P 500 equal weight. If we take a look at the example back here, coming back to the September 5th level to the September 19th area, the equal weighted ETF for the SPY, which is RSP, the Guggenheim, that was making a lower high. What was the SPY doing? Making a higher high. That was a warning signal, and what did that warning signal do? Well, that took us all the way down into the lows in October 16th. Now, from the trading session of October 13th to the October 16th time frame out here, by just taking a look at closes inside of the SPY, it was making a lower low. But what was the equal weighted ETF, the RSP, doing? It was making a higher low out there. So again, this chart here for today's purposes doesn't mean anything to me until I see the close of the bar out here. And at this stage, so it's unknown whether or not there's truly a divergence. If there is a divergence, if tomorrow the SPYs, for example, move lower, but the equal weight doesn't, it is providing us with a really valuable piece of information. So here, Bob, is a correlation chart that I think will help you stay in, and this way it'll help you trade the S&P 500 better than trying to correlate it to what might be going on with regard to gold, and where there might be an influence with regard to a currency pair out there. Not that there's not an influence here with the currency pair, but I think I've helped to prove the point over the years that the currency pair that you take a look at for the S&P 500 happens to be the Euro-Japanese yen. It's really not the U.S. dollar index. The U.S. dollar index should be used as a correlation. Now, it should be used as a correlation for the for mining. And the example of that would be, I just have to find it on my screen here. Well, here's the euro. Here's the Japanese yen. Here is the NQ, and we can see. So the Euro-Japanese yen happens to be the blue line out here, and you can see just how well this currency pair, just simply from a directional standpoint, correlates to the market out here. Now, if we take a look at the Euro-Japanese yen as an example, right now, if you come from the trading session of December the 3rd, you can see it's basically flat versus our market here, versus the AES mini, which is moving lower, versus the NQ that's moving lower as well. 877-927-6648. Steve Rhodes, TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 147 right now. S&P down 16. Composite off 34. Russell down 9 points. Let's go take a look at the ETF structures out here. Let's go take a look at the Dow Diamonds off a $151 this morning. Trade out of 176.45. Yesterday, moving lower with 7.9 million shares. So far this morning, we've been trading for an hour, 1.6 million shares. That's a volume similar to yesterday. Moving down into the trading session here of November 28th, the real key level of support inside of the Dow Diamonds is going to be that breakaway on October 31st, 172.79. Yesterday's low is also going to be important to hold out there. If it breaks yesterday's low, you'd have to say the 172.79 would be the mark. If we take a look at the SPY right now, that's trading off $165. Just an inside day here from yesterday, so not really revealing to us a whole lot of information. Volume-wise inside the SPY today, 25 million shares. Yesterday, 125 million. So we've got lighter volume today inside of the SPY, just simply taking a straight line 6.5 times 125. What would that get me? Well, 4 would be that'd be about what, 150 or so. No, I take that back. 25. There is volume. There is volume, similar volume to yesterday, maybe even a little bit more. My apology on my math exercise out there. Let's go take a look at the IWM Russell 2000. It's trading off 85 cents. What a wide-ranging bar yesterday. What the IWM did was came down and it tested that October 31st breakaway gap out here, the top of which was 115.38. Of course, what we know about the IWM, and this is more of the amazing thing, is if we put the weekly chart out here, we're going to find that the IWM really hasn't budged much over the course of the last 6 weeks out here. 6 weeks. We have 4 dojis. This week happens to be a doji as we speak right now. Inside of the IWM here, just one session, 1 week here. Last week, which was basically, I think maybe on Friday, we saw a move inside the Russell 2000. So this thing continuing to trade in essence sideways as it has for over a year inside a large consolidation pattern. If we go take a look at the QQQ ETF, that's down 70 cents as we speak right now. She's trading out at 104.25, 9.7 million shares traded today. Nothing in the way of any kind of, well, this is the weekly chart. Let me put the daily chart on my screen out there. That'll make it a little bit easier for us to look at. Also, really an inside day to take out yesterday's high. Let's see. Yesterday's high, 105.04. Today, 105.03. Yes. So no real meaning here. Volume-wise, today, 9.7 million shares. Yesterday was 46 million shares. So 9 times 6, 54. Yeah, you got a little bit more volume as we speak today inside of the Qs. The real key is going to be the lows of yesterday. Will they hold? Because we've got hammer candles galore out here. Of course, the big one being the S&P 500. If we take a look, I did this during the first hour. If we take a look at the S&P 500, let me put this on. So key level of support here, 1971. Let me put this back to the weekly, then we'll switch over and take a look at the daily chart. So I'm going to give you some levels out here of support for the S&P 500. You've got 2028. That happens to be a significant level of horizontal support out here. We saw price break through that area back. The week began November 3rd, came back and tested the week of November 10th out there. That should be our support area inside of the S&P 500. If we go take a look at this is the S&P futures. This is kind of a cool tool that the guys over at Trends Formula Consulting created, using the eSignal platform. Just simply an extraordinary set of tools out there. If you were a person that was using the MACD and the stochastics out here, take a look at my screen. I mean, how cool is? Let me explain to you what it is that we're looking at. First of all, on the bottom of my screen out here, the bottom left, this little dashboard. Now, what I've done is I've gone ahead and put in the time frames that I want to follow for this specific chart. This specific chart is the S&P 500, and in column 1 for the stochastics is on a 300-minute chart. So we are looking at a 300-minute chart as we speak right now. On a 5-hour chart, it says that 2044 is our, our horizontal trading range boundary line. That's on the 300-minute time frame. I'm going to go ahead and populate it with the daily so you can see where the daily line is at. That's 2034. As price had moved down yesterday, that's where it also found support. So this is on the 300-minute time frame out here that we're looking at. Now, what this shows me on this 300-minute time frame, that is column number 1. Column number 2, you see a little D next to it, that's for daily. In column number 3, it's got W for the weekly out here. So I can take a look at in one shot a dashboard because of the time frames that I've selected, and take a look at the 5-hour, the daily, and the weekly to see whether or not there's a bullish or bearish cross. Now, what will happen in these charts out here with regard to stochastics, over in the right-hand side, I've got this little tool that helps me identify, hey, when these things are green, it means all 3 time frames are up. When it's blue, 2 are up, 1 is down. Light blue, 1 is up, 2 are down. Just simply as a guideline. And I'll show you, I think I can, let me do this here. Do I have some different colors? No, they're all in red. They're all in red right now. No, they're not. We've got some orange over here. This is just simply a 5-minute chart. And what we can see is you've got This is basically as of the close, but let me switch back over. Let me try to keep this thing on point here. Let's take a look at the 5-hour chart. What I've also got is I've got the MACD, both the 300-minute and the daily time frame out here. So this tells me whether we are in either what you could call either a bullish or buy or a bearish or sell type of a mode out here. And so in one screen, I can put it all together. And now what I've added to it are these horizontal trading ranges. I've also got the TAS market profiles out here. Someone could say too much information. It just all depends what your eyes are so easily able to see. And, of course, you can turn things on and off out here. But these are all a great set of tools. And the reality is that you can actually set up a watch list for everything that you want. Now, I don't have that set up on this screen just simply because it goes ahead and you consume so much power, so much energy. But you could actually have a watch list, if you can picture a watch list, and having your instruments and then having the same set of time frames. You can see here on this chart, just as an example, here's a chart where I'm just looking at the 5-minute, the 10-minute, and the 30-minute chart out here, and then the 5-minute and 30-minute for the MACD inside of the marketplace. So, depending on the time frames that you might trade, and if you were to use these tools out here, man, what a great set of tools. I'm going to have these guys from Trends Formula Consulting on because they've created, and it's a co-op, which is pretty cool. So it's a co-op where if you've got something that you want to maybe add to a tool that you're looking at, such as this here, someone had to develop this, and these guys just turned me on to it. They will go ahead and develop it. It becomes part of this co-op. So you've got the access as opposed to just trying to maybe buy one indicator. That means that other people are going to have access to it as well. But, what's the big deal out there? So pretty cool. So if you do use the eSignal platform, why don't you look these guys up, because they've got great sets of tools out there, very affordable for sure, and you use them to your advantage out here. Now let's go back and take a look at the market. Let's go look at some things here that are moving inside of the market. Let's go take a look at some things that are moving to the downside. We got Priceline. That's the leader in the clubhouse, off $10 this morning, down a little under 1%. Priceline, let's switch back. Oh, we are in the daily chart out here. What is Priceline trying to do? Priceline had this little breakaway move to the downside. That was on November the 4th out here. That had 3.3 million shares. Right now it's trading below, just slightly below that level, which is at the price point of 1126.23. You're at 1124. That says that they go test the low of that level. That'll be 1081.39. That is on PC, ticker symbol PCLN. If we take a look at Targa Resources Corp. Oh, actually, somebody wanted me to look at something. Let me push my den up here. Give me a moment here. Somebody wanted to look at something, and I forgot. Steve, if you have time, look at ISIS. ISIS. I wish they would have changed their ticker symbol. ISIS is the ticker symbol. And let's go take a look at this. Any projection on that one? Thanks is the response. Thank you there, Peak D. So if we take a look at ISIS, I know it's not a terrorist group. It's just not the symbol that I would want to be associated with. Now, this is traded at 59.76. They're a pharmaceutical entity out here. This thing looks like it is, well, it's not at its all-time high, but that's where it's headed to. That's what it looks like it's headed to. It's trading inside that swing point, I believe, right here. Let me put the line across my screen. Let me take this, turn that off there. There we go. The low is, give me a moment here. 50, the low of that swing point is really what I was trying to say out here. And that's the swing point from February 24th. You've got 3.1 million shares. This has done 1 million shares as we speak right now. So 1 million shares. 1 million shares. You're moving into the swing point with volume today. Let's take a look. Let's put the line out here for the high of the swing point so you know where this thing is headed to, at least, or what it wants to test. That's going to be the 62.66 mark. So that, at a minimum, is where it is headed. But it's moving into that swing point with volume. If it gets over that level, 62.66, it should act as resistance. I see that the candle that was formed there was a shooting star. So the candle formation on February 24th. Let's take a look at the weekly time frame and see what this is doing inside its weekly swing point as well. See if it's moving in here with volume. So we're pulling this back. This is ISIS, ISIS. This has volume on a weekly basis from the week that began February 24th. That was volume of 11 million shares. Now you're, we're just into Wednesday. You're at about 7 million shares. We're not even through the halfway trading point of Wednesday. So you are on a weekly basis moving into the swing point with volume. That says to me that that is where it is headed to. If we take a look at A to B equals CD patterns out here, there looks like a couple of them. Your A point was down at the price point of the trading. A trading session at 22.25. That was the month of May. Yeah, we're looking at a weekly chart. The week that began May 5th out here. Right now, this thing has done a 1 to 2 A to B equals CD to the upside, but the reality is this thing is headed out to the 1 to 2.618. If we take a look and see what that number is, we'll add that to the screen. Let's go ahead and make that white out here. Why do I want to close that? I wanted to change the color. There we go. Close that. Apply that. There we go. So the next level on this is 67.03. So pretty good chance that what this does is this may spike the 62.66 level and get up to 67.03. Again, that is ticker symbol ISIS, ISIS Pharmaceuticals. Now let's go back. We would take a look at things here moving. We were looking at some things moving to the downside, I believe. Targa Resources Corp. Ticker symbol here is TRGP. Let's switch back to the daily chart, although the monthly chart doesn't look very good, but let's switch back to the daily chart. Down 7% this morning, 292,000 shares so far. This looks like this has a confirmed A to B equals CD to the downside, with the B point out here being the trading session of October 14th, 1.4 million shares. That was taken out with 1.6 million shares. Let's pull this back just a tad. Oh, how about this? So this is kind of interesting. This has a untested high volume high. No, I take that back. Actually, there was really this kind of wild. As I first took a look at it, it looked like a high volume high. Now it did spike higher with some pretty decent volume. That was on June the 19th as it got up to a price point of 160.97. But this thing actually gapped lower the next day with volume. So there was some volume off of the top out here. If we take a look at different A to B equals CD patterns, let's look at them. Let's take a look at coming off of this high. That price point, by the way, is 160.97. There's your A point. Here's your first B point, and here's your first C point out here. So what this is headed to is the 1 to 1.618 at a minimum. But there's a secondary A to B equals CD. The C point out here, which was on September the 9th, that becomes now my, come on, work for me. There's my A. My B out here is October the 14th. Let's see where the secondary A to B equals CD down pattern takes us to. Let me come... I can't change the color. Let me do this. Let me delete this first one. That's what I will do. I will, let me just, hold on the shift key, click on that. There we go. So here is the second one. So it looks to me like where this is headed to is about the 82.72 mark. Let me pull this back further, see if there's anything down around the $82. Just a little sign of strength all the way back here from January in 2014. That low was $86. The session before was about $84 and change. Looks like that is where Targa Resources, TRGP, is headed to. Also moving to the downside, you've got Alexion Pharmaceuticals, ALXN, down $6 off 3%. Here is the daily chart on this. This has got some pretty decent support out here, or it should find support down at the breakaway with volume. That was 2.3 million shares. That was the trading session. This was the gap up at 177.72. Right now, this is pulled back to 193.80, volume of 268. The swing point that it's trading into has volume of 929. So pretty decent volume as Alexion Pharmaceuticals moves a tad lower as we speak right now. If we look at also moving to the downside, a lot of pharma out here. Let's take a look at the IBB and just see what the IBB looks like. This thing was moving quite a bit higher yesterday, I believe. It wasn't moving higher, but it certainly was not moving lower. So far today, you got an inside day. What's an inside day mean? Again, it means that the trend that you came from is likely to continue out here. The high of yesterday was 315.66. The high today so far, 315.36. Trading just inside that bar out here. What do we know about a swing point from October 31st? 1.7 million was taken out with light volume, all the way up until December 8th, where it did have about 1.9 million shares. This is Steve Rhodes, TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 139, trading out at 17,661. S&P is off 14. Composite down 23. Russell down about 8 points. All right, so let's try to put this day in perspective at the moment. First, let's take a look at the summation index. Let's look at the New York Stock Exchange. Let's look at the importance of yesterday. Number one, inside the NYSE, yesterday it formed a hammer candle. After making a 1 to 1.272 A to B equals CD to the downside. The low inside the New York Stock Exchange yesterday, 10,742.73. So far, intra-session, the low that we've seen is 10,739. So 10,739 versus 10,742. What does that mean? That means the low of that hammer candle has been been tested. That means in the case of New York Stock Exchange, she needs to hold that low. That means it needs to close today above the level of 10,742.73. If it does, what you've seen is you've seen a test of a significant area of support. What do I expect? Well, you know that I have expected a scary bottom. My thought was, my thinking still is that yesterday's low was that scary bottom, and all that we're seeing take place today is a test of that. That thinking will go out the door. We'll have new information if we see the New York Stock Exchange close below yesterday's low. It is just as simple as that. That's 10,742.73. If ever you were going to go ahead and buy a market or buy a hammer candle, well, this would be the time to do it, because it becomes where your back is up against the wall. It's the best reward to risk that you can have on any kind of position out there. Why do I say that? Because you go in, you still use a stop, always use a stop. You still use a 1% risk. You go ahead, means your stop is going to be wider than just a tick below this area. And if you get a close inside, and you're not buying the New York Stock Exchange, you'll be buying something else out there. I'm not going to tell you what it is that you should buy. But the general market here, all that it's done is test yesterday's low. If you close below that, that's saying, hey, we got trouble in River City. That scary bottom that Stevie was looking for, it's just not in just yet. Will it come in? The answer is yes. We'll just have to find another spot. Will it be maybe a 1 to 1.618, A to B equals CD, as we had back here as the lows in October of 2000? And October 15, 2014, yeah, that could be it. So it's very clear. Now, if we take a look at the summation index, bears, sellers are still in control. This thing did not pop above the zero line. The composite did, though, by the end of the day yesterday. And so, you know, the composite's going to go ahead and lead things to the upside. Now, we've also got the VIX index out there. The VIX index is trading where? Above its 50-day exponential moving average. Good for sellers, bad for buyers. Bad for buyers unless you're going to try to buy a bottom. Well, with that hammer candle that we just took a look at, that's an opportune time to buy the hammer. Again, if you were to buy this market, I'm telling you, you got to close out that trade. You got to take your loss. It's the only thing that you can do if you see it close below that low inside the New York Stock Exchange. You can always get back in, but don't be wishing you would have got back out, because have a strategy. Now, if we take a look at the, go back to the summation index and take a look. Whoops, I hit the wrong tab out there. It would be helpful if I hit the right tab. If we take a look at the NASDAQ composite out here, the NASDAQ composite yesterday, it just simply it reared its head and got above the zero line, but all it was doing was running into a trend line out here that has deflected lower. If we take a look at the candle session, though, from today inside the composite, we're basically seeing no damage whatsoever. I mean, insignificant damage. If this market's going to cruise lower, the composite's not going to be hanging around at the highs like this. That is bullish, not bearish, in my opinion. This supports what I believe is going to be the next bottom that comes in for the Santa Claus rally. So though that is my thinking, I hope that that assists you. But if not, stay tuned, because our man Basil Chapman, he's going to be up next. And, of course, this wonderful Wednesday. That means we've got Larry Pesavento. We've got Daryl Martin, David White, the Tom O'Brien Show. Have a wonderful Wednesday, folks. So look forward to seeing you bright and early tomorrow morning. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.